Hello, traders. This is my weekend video, and I've been working a lot, and we're having serious labor issues. Like I had mentioned in some of my chat rooms, we had 9 employees this time last year with 2 crews running, and now we're only down to 2 employees because we can't find help. So that's the Trump effect, and near zero unemployment makes it very difficult to find workers, even if you are willing to pay top dollar for them. So uh, makes it very difficult right here at this market high. Uh, the one thing that I noticed that you're really not hearing much talk about, and that is the bond issue. What we've got a situation is a flattening yield curve, and as of Friday, we had this little mini Head and Shoulders. Uh, it's a bear flag, actually, in context. So, or a mini Head and Shoulders, whichever way you want to call it. And we had the flag breakdown or the Head and Shoulders breakdown, whichever way you want to call it. And basically, the 30-year treasuries are breaking down for the higher yields. So just keep that in mind that interest rates are going up. And if you check, I have overlapping comparisons of the different time frames, the 2-year, 5-year, 10-year, and uh, 20-year. And basically, we're basically seeing a significant bid under yields. And so be very careful here on thinking these markets can continue to go higher, because as these yields break down, it's going to be increased pressure on your technology stocks. So uh, basically, I think we're going to start seeing a fast move this week into higher yields. Okay. And then on your flip side here, as you can see, we have a little bull flag going on our TNX, and we had a breakout as of Thursday and Friday, or well, basically Friday. We had a breakout of this bull flag on our TNX. Now we don't have higher highs yet, but I firmly believe we're likely to see even this week that we're going to see new highs for the interest rates, because they are catching a momentum bid here. So bonds break down this week, and we're going to see continued upside pressure on the interest rates. And the problem with that is the flattening yield curve, because it's virtually flat right now. And if we start seeing sustained bids in the longer term rates, because I was showing you the 30-year earlier, and it was actually plummeting the fastest. So that means we're have the potential by the end of the week or next week of an inverted yield curve, which would be very bad for the banking sector. So keep that in mind. Okay. Now, some things that I'm looking at for this week. I'm seeing continued weakness in the NASDAQ, in my opinion. Uh, Basically, largely driven by the yield curve. Now, if the yield curve does continue the trajectory, which it looks like it's continuing, that's going to be increased pressure on the NASDAQ or the NDX, the NASDAQ 100, which have just been completely over the past several years outperforming the markets, and they are highly susceptible to the rate hikes. So what we got right here is a gap fill right below, not too far from below where we ended up closing the day. So keep that in mind. You're only looking about, well, basically, you're looking about 30 points lower on the NASDAQ, and we should start seeing some responsive selling in the NASDAQ. So very risky here that we're going to build out value at this lower distribution zone starting this week. So we do have the election and election results, and if history repeats itself, once we get the election behind us, the markets will catch a bid, if we look at what happened after Trump got elected. But the higher rates are critical right here. I'd say keep all eyes on the bond rates this week. That's what's really going to dictate how the markets are going to unfold here. The second area of interest, we had a bullish cross for the financials, the XLF. And the very next day after the cross, we get a significant sell off. Now, this is not the type, what we should have saw here, we got the cross this day. This day should have been a very bullish close day on the XLF. And the fact that it sold off tells me, suggests to me that the bulls got trapped Friday on the financials, and there's a strong likelihood we are seeing a high on our financials here, and we're going to roll back over. So we'll see what happens if history, if my chart analysis is correct. But I do think with what's happening in the bonds, it's going to be a negative for the financials. Now, what surprised me was the regional banks, which are highly susceptible to the longer term yields. It actually caught a bid Friday, despite the fact of what was happening with the treasuries. So just keep a very close watch on this, because this is typically the opposite of the situation you would see with the regional banks here, with the treasuries catching or getting sold off, the 30-year treasuries being sold off here, and the yields really going up. So we could probably see a strong responsive sell-off here this week in our IWM and our regional banks. So keep that. Like I said, IWM was leading us on the way down, and now seeing the treasury yields doing what they're doing, I would be very concerned that relative to any strength in that you're going to see in the IWM, your Russell, is likely to lead us to the downside. So be careful. Very strong possibility a bull trap in your IWM. And as you can see here, I do strongly believe that this is a topping candle for the Russell. And we are going to revert lower here this week. So we'll see how things play out. Our SPX, we have a gap fill right below. And if the NASDAQ rolls over, this is probably going to fill. So keep this on your watch for this fill of your gap right below on the NASDAQ or the SPX. Your diamonds, your Dow Jones. This is another one. This is likely a rejection candle of the higher distribution. We looked above, came right back in. We have a bullish cross on our MAs right here. So we do have a negative volume flow indicator. It's still in the negative area, even though we do have a slightly bullish signal on there. So just keep that in mind. The negative, I think, trumps even the slope of our MAs. So just keep this in mind. We have a negative cash flow going into the diamonds, suggesting at this high here that it's a very weak scenario. Okay. Apple, it looks like this is just the beginning, in my opinion. Our MAs and stuff are confirming money flows are rolling out of Apple, and we came right down to the intermediate term trend, and we tagged it the 50%, and we did a slight bounce Friday. This is the first day after earnings. I do not think this is a buying opportunity here. I think what we're going to see will probably open the day there Monday around the 206 area, and once that breaks, then it's just going to be continued for several weeks here for a sell off, probably back down to the 196 area or the 190 area. The primary trends right down here at the 192 area. So, yeah, I do think we're probably going to be coming right back down to the 192, and that this has a, just keep an eye on your interest rates and then the money flows into the Nasdaq. But I do think the technology for the month of November is probably going to be under a lot of pressure. Okay, on our FANG stocks. FDN is a good proxy for your FANG stocks. And basically what we got here, we got pretty much a flat money flow situation on our indicator. So no real bias either way for the FANG at this level. We do have a bullish cross suggesting we had a short-term bounce in FANG right here at the primary trend line that started back in early 2016. And we saw a responsive sell Friday right here next to this trend line. So this is a very weak situation for the FANG stocks. And some people think of this as a potential bounce. But if I would have thought that real money was coming back into the FANG stocks, I would have really expected a much larger candles, intraday candles for this index, and that's not happening. So with the interest rates rising like they are, I do think we're going to come down here. This is a bull trap, and we're going to come down here, retest the gap at the very least, if not fill the gap on our FANG stocks here this week. So be extremely careful thinking that the troubles in the technology and the FANG are over, because I do not think that's the case. Okay, your SMH, your semiconductor index. It caught a responsive buy into Apple's numbers right up to and back tested the intermediate 50% fib fan. And as of Friday, we got a rejection because the Apple sell off from that fib fan, which I do think this is a bull trap. Very negative volume money flows into the sector, and we do have the momentum up on our MAs is getting a potential bearish signal there as of Friday. So be extremely careful. I do think that we have a bull trap in the semiconductors here, and that now that we are on the south side of the primary uptrend, that this was the prime area to initiate a new short for the semiconductors starting this week. Okay, and the other main sector which I have been watching, and that is your transports. And this is the primary trend line which we have been holding all the way from late 2016. And we looked above there Thursday and Friday, and we're coming right back down to it, but we managed to close right above the primary trend line as of Friday. But I do think this is also a bull trap. Our signal line, our MAs are indicating a bullish uptake, but I was watching the money flows there Friday, and I was not impressed at all. This move was done on extremely low volumes, so I do think this is a bull trap, and the primary uptrend from 2016 is about to be violated, in my opinion. Here's our earnings calendar for this week. Really important stuff still hitting the tape. Booking Holdings, that's the one that Monday afternoon, that's your price line. I do think this should be part of the FANG, in my opinion. It's a very high flyer, and it's reporting, and if it's like all the others, it's going to get a responsive sell on the earnings, and it is a market moving event. So leisure and hospitality is going to be a major theme that's going to be impacting the markets the first part of the week. So keep that in mind. CVS Health has been underperforming. So just keep in mind some of these names here, how they're going to affect different sectors. That's all I got to say, and see you next week.